We are here today to announce that the Justice Department has secured felony guilty pleas from the world's largest cryptocurrency exchange, Binance.
Actually, it's Binance.
Binance.
Binance. Largest virtual.
Binance.
Binance. And let me be clear. It's Binance.
Binance.
Binance. Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1 billion, 300 million, trillion market cap. Let's fucking go, crackheads.
Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my cappuccino coffee locked and loaded, ready to go, because we have to talk about a lot of things. The Bitcoin has corrected a little bit, and there is so much FUD in the market, but some things are worth discussing, such as a potential of a 51% attack on Bitcoin. What are the chances? What is the likelihood? As well as Michael Saylor's Bitcoin strategy being a danger for the bull market or in a bear market. That is one part, but then also a big part of the stream will be VeVe shifting from a gem model to an Ecomi, basically being the currency model on their app. And yesterday I made an Ecomi only stream, and today this topic would have deserved basically a VeVe only stream regarding this gem topic, but it will be packed, so make sure to stay all the way through. So good morning to each and every one of you. I see you guys are very busy, excited here in the chat. So good morning to everyone who is already chatting in the chat. We are looking first at crypto, then at the altcoins and VeVe. That is the nature here. As there are also many people interested in where the macro goes, and as you all know, we have the philosophy here that the macro is more important than micro things. Of course, if there's such a fundamental shift like in VeVe, it needs to be discussed as well, so we are reserving some time for that today. If you enjoy this stuff, then make sure to smash up the like button. I've already received here the compliment in the chat that I have become a great morning host, so appreciate that. Thank you for that. But if you enjoy that, then please also smash up the like button, and let's jump right into the topic. So Bitcoin has basically opened up a new range in which it behaves, which is here to see on the daily chart. Very good to see on a 4-hourly even more. We do have touch points on both sides, and this is basically where we expect Bitcoin to bounce and come back. So the market sentiment was very negative after this Bitcoin correction, after altcoin corrections and so on, almost 10% down from the all-time high. Especially retail has absolutely flipped bearish. We do see it here. This is very cluttered up, but let me just sum it up quickly. The crowd sentiment flips from bullish to ultra bearish after Bitcoin fails to bounce. Historically, this is a buy signal. So everyone is fudding around, and of course, crypto Twitter looks like this, right? When this happens, so before the bounce. So I think we're almost there with the little bit bearish times. But what is happening in those times is when Bitcoin corrects is that people are coming out, and the usual Bitcoin FUD is coming out, right? One of them is just in Bitcoin is now at risk of a 51% attack. as 2 mining pools control over 51% of the hash power. And that refers to this post from Jacob King saying Foundry USA just mined 8 blocks consecutively. This is extremely alarming. Even many Bitcoiners I know are starting to panic. I don't know which Bitcoiners are those, but fine. I've been warning people for years. Yes, that is what Crash Profits also do, right? They warn people for years, and then when it happens, they say, see, I'm right all the time. Maybe I should shift my content to, the biggest economical crash of all times is coming. You heard it here first. And then like in 5 years, I will be sitting here. It's like, told you so. But missed out on the massive bull run. Bitcoin is dangerously centralized. A tiny group of miners and insiders dominate both the network and its price. And this is just more proof. Another massive red flag. Blocks are now sitting empty while fees have plummeted to 1 SAT per whatever that is. Literally no one is using Bitcoin. That is not true, the last sentence at least, but let's see. Let's discuss this a little bit. Then we have also a direct reaction to this. Everyone screaming centralization at 8 Foundry blocks in a row is missing the actual signal. Bitcoin is not a stock you hold. It is thermodynamic truth encoded in math. Mining is probabilistic, streaks happen, fees collapsing, and it's like in poker, right? It's like a royal flush, you know, and then followed by a full house or something like that. I mean, it can happen, right? You can have a win streak, you can have a losing streak, right? Fees collapsing and empty blocks don't mean Bitcoin is dead. They mean the network is clearing like the ocean at low tide before the next wave. The real centralization risk isn't Foundry or Antpool. It's fiat system you're still trapped in. Bitcoin is the only network where power is checked by physics itself. Now, because I can't tell for myself, like, I understand a bit about Bitcoin, but I don't understand enough about Bitcoin to judge this fully. So what did I do? I went to ChatGPT and I discussed this a little bit. You see here I have Chat 5, blah, 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 right? So we can do a little bit of an excursion here on how what's the reality of Bitcoin 51% risk. So my question to AI was, hey, this post, what's your thought, right? Historical context for us on this topic. In July 2014, the mining pool Ghash.io briefly exceeded 50% of Bitcoin's hash rate, sparking community concern following backlash. The pool pledged to limit itself to under 40%. So back then, it was one pool that was able. So the danger was way higher back then than it is today, because now today you have 2 pools at least that have to collude, right? To do that. Then more recent insight, mining pool centralization 24 to 2025. As of May 8th, 2024, the top 3 mining pools, Foundry USA with 30, Antpool 28, and Via BTC 12.8, collectively control 70.1% of Bitcoin's hash rate. A collusion between any 2 of them, e.g. Foundry and Via BTC or Foundry and Antpool, could exceed 51%. Open Exo analysis published about only 5 days ago reports that Foundry USA and Antpool control 54 to 60% of the network's computational power as of 2024-2025, significantly raising centralization concerns. So that part is according to what we see here right now with the sources, that part is true, right? There is the centralization, but we come to why it's still not that much of a danger in a second, right? Etherworld confirms that 2024 Foundry USA, Antpool, and Via BTC mine almost 71% of Bitcoin blocks. It also notes that modern pool operations include safeguards to avoid accidentally crossing 51% threshold. So, of course, there is a streak of 8 consecutive blocks. If in any one of those, if they like all have 30%, I mean, the chances are not that low to have a streak, right? If let's say you have 3 players that absolutely dominate at a table, poker table or whatever, right? The chances of one player in thousands of games winning 8 times in a row is not that high, right? We do see that, right? So now, can two pools actually execute 51% attack right now? Let's break it down. Technically, yes. If two major pools wielding over 51% hash rate, they could conduct a 51% attack, such as double spending or censoring transactions. In the double spending, it also comes out why economically that doesn't make sense, right? How risky is this in practice? Experts believe that Bitcoin security still holds because the cost of mounting a sustainable attack, especially on a network of Bitcoin scale, makes it economically prohibitive. This is the key word, right? From now on, wherever you see this, remember economically prohibitive. There is community and technical mitigation. Mining protocols like Stratum v2, mining diversification and node level enforcement help guard against such threats. Okay, now, the statement that two pools control 51% of Bitcoin's hash rate is factually accurate based on recent data. Pools like Foundry and Npool together do reach the threshold. However, starting Bitcoin is now stating that Bitcoin is now at risk of 51% attack implies an immediate and imminent threat, which is overstated given the economic barriers, existing safeguards, and decentralized enforcement mechanism in place, plus economic barriers being the biggest, right? Let's jump to, so I said then, okay, then what would be the cost of such an attack, right? So how does a 51% attack work, cost component? To overpower the network, attacker must control 50% of the hash rate, so which they do, right? And run this power continuously, so they cannot shift the hash power then like mining pools do. Electricity plus hardware to sustain the attack. So then you have, if a government, for example, or whoever wants to do it, they have to build up all that hash power first, right? So there's huge capex. So we're talking billions of dollars in machines, and then we are talking $20 to $30 million per day only electricity cost to sustain an attack, and an attack has to go on for a long time or for a longer time. You need infrastructure, warehousing, cooling, network transform, logistics, billions more, opportunity cost. Instead of attacking, and this is why it's not happening, especially for mining pools. Mining pools are not there to attack and bring down the network. They want to make money. So instead of attacking, the miners could just earn block rewards. And that's what every network that builds up this hash power will see. Instead of, so daily Bitcoin issuance, 900 BTC, I think this data is outdated. It's 450. I think it's half of that, right? But still, that would be 107. So 107 million he calculated on 900 BTC, but actually it's 450 BTC issuance. So you have $50 million per day miner revenue instead of like costs per day, right? So economically, it doesn't make sense to perform the attack, right? So upfront cost. Hardware costs 13 to 15 billion to build up that if you want to do it as a new attacker, right? Steadily increasing, because mining pools, if they lose share, they will also increase, right? So it becomes a battle if the mining pool is not involved. Daily running costs 13 to 30 million, infrastructure 2 to 4 billion, lost mining rewards 50 million a day, right? So it doesn't make any sense, right? So there you go. This is why experts say Bitcoin is secure by economics. Even state actors would find it massively costly, logistically difficult, and politically self-defeating to do that. This is why it did not happen yet. And over time, probably there are more mining companies entering the market that will absorb parts of the share, so that you would need. Now, in 2014, one mining pool was able to exceed 51. Now you have two mining pools that could collude together to 51. in a couple of years, I bet it would be 3 or more mining pools that would have to collude together, right, to bring down the Bitcoin network. Okay, there's one part of the FUD. Let's go to the second one, right, which is this one. Michael Saylor turned a dying company into a $33 billion vault, a system built on leverage, dilution, and single condition. Bitcoin must never stop going up. Here you can see it, right? And most people don't understand how dangerous this model is. Okay, so let's see the danger of this model, because these stories, they come out when Bitcoin is correcting, right? So just to discuss this here a little bit. So MicroStrategy holds 630,376 BTC. We can barely imagine how much that is, right? They spent over 33 billion to get it, and almost none of that came from actual business revenue. It came from bonds, stock sales, and never-ending flow of capital from investors who believe Saylor will never sell because he says so, right? That is the perfect recipe, in my opinion, this which we are discussing this for the next bear market. But see for yourself. The core of the strategy is simple on paper. Raise money through convertible notes, raise more through ATM equity program, use all of it to buy Bitcoin, repeat. Every round adds more Bitcoin, every round increases the risk, okay? And strategy is continuously having rounds, right? So the bond deals are extreme. MicroStrategy now has 8.2 billion in convertible notes. Some have zero interest. Some convert to stock if the price explodes. None are backed by Bitcoin. If the stock keeps pumping, the debt turns into shares. So dilution of shares happening every time Bitcoin price goes up. If not, the debt remains, right? And needs to be serviced wherever there is non-zero interest. The equity sales are aggressive. When the stock trades above its NAV, Saylor launches new ATM programs. Hundreds of millions get raised in days, and Bitcoin keeps flowing in. But every sale means more dilution, and that dilution only works as long as the hype holds. And that is something we already saw in the last bear market, where also MicroStrategy was in danger of being liquidated below 14,000. Bitcoin never went there, and Saylor would have still had tools to lower his liquidation price. The software business still exists, but just on paper. 463 million in annual revenue, flat growth, minimal profit, barely enough to cover interest. It's a zombie company with one job: give Wall Street a legal wrapper to access Bitcoin. The question is that necessary once all market structure bill and everything, all regulations are in place? That is the big question. Is that necessary, right? So the revenue that they have is really not that big if you see the money that they are pouring into from investors into Bitcoin, right? So Saylor stepped down as CEO in 2022 and became executive chairman. He said it was to focus on Bitcoin strategy. Then came the rebrand. MicroStrategy dropped the micro. It's now just strategy because the software is dead. Only Bitcoin remains. On-chain data shows there has only been one sale, 704 BTC for tax harvesting in 2022. The rest has been pure accumulation. Some wallets are in Fidelity and Anchorage, others are on Coinbase Prime. Over 400,000 Bitcoin are in cold wallets with UTXO rotation patterns. Okay, so very typical safeguarding. This is a high-risk experiment in financial engineering. Yes, this has never done before, and this has only experienced one bear market, right? Debt without coupons, equity with constant dilution, a treasury model that only survives if BTC keeps going vertical. And every piece depends on market confidence. Now, here's the thing. We do see here, right, where all the buying and so on. If we see and there are many companies that copy that model, he's not alone, right? My personal take is if a market crashes, not necessarily strategy, but other companies that follow the same model, don't actually have a business behind it, will get liquidated and have to sell Bitcoin, just as all these collapsing exchanges in the last cycle had to sell their Bitcoin, which spirals the price down within minutes, which forces the other companies that get liquidated to sell more Bitcoin at these prices. So it becomes a spiral down, right, very quickly, just like in the last where you have waterfall like collapses. So if the market crashes and Bitcoin trades below $40,000 for too long, the whole model could break. And when that happens, MicroStrategy may be forced to do the one thing it promised never to do: sell. Now 40,000 is very, very low. It's below, let's say it's below mining cost. It's where miners also would shut down their machines, basically meaning that they will not provide new Bitcoin then into the network because electricity cost would be higher. Right now, the cost of mining a Bitcoin is roughly $60,000. So that is where naturally $60,000 to $70,000 where you should expect a bottom, which also Saylor knows, which is why the liquidation point is so much lower, right? The question is, could you attack the Bitcoin price once it's already at 60,000 to wick down to 40,000? Then the question is, can you sustain? Can any entity sustain the sell pressure against short-term buying of others? Because I, for myself, if I see the price going somewhere to 40,000, I will be a massive buyer at that point, right? So that is where, let's say, this is the FUD, but also, hey, how realistic is it, right? 51% attack we discussed right now. Now we have the topic of, can Saylor get liquidated with his 630,000 Bitcoin? And I say the chances are relatively low if the liquidation price is 40,000, especially if we're not done yet with Bitcoin going up. Everything, I mean, you have to see already a 50% correction from where we are right now would bring Bitcoin only to $60,000, right? So the crash is coming. That is, in my opinion, for sure. I'm not a defendant or someone who has the thesis that of super cycle. I think that's bullshit because the global liquidity will contract and everything will come down again. It's absolutely normal. Why should we follow a theory of, hey, global liquidity is expanding, that brings all prices up, but then say in the same sentence that it will not come down because of XYZ? That doesn't make any sense, right? So that are the two FUD scenarios that we are hearing about at the moment, right? I don't think that any of this is realistic at this point in time, but I think it needs to be discussed, right? So yeah, this is a real possibility, but it's a low possibility in my opinion. Now, quickly, let's look at the chat. Let's look at your inputs here. Let's also welcome all rare hodlers here to the stream. Thank you for subscribing. Thank you for supporting me all the time. We have Trucking Hank in the house. Looking forward to all your thoughts on BTC and Omi. Yes, BTC already done. Omi and VeVe will come. Troy Paris also in the house. Morning PH. And hello chat. Green Lantern in the house. GM boys, hope you all are all good about to drive, liked and paying attention. Selling escalation from big players is a real thing. I agree, fully agree with you here. Trucking Hank says buy the dip. That would be the case, yes. Mewtwo also in the house. GM fam, props to Patient Hodler for these morning streams. Dude is working overtime. He deserves sponsors. Thank you very much. And no sponsors here besides you guys. Dan O, is VeVe really removing cash out? Yes, we will talk about it. But no also, because you can still cash out. Domvu, good morning gentlemen. Good to see you, Domvu. And Nick Lilipska is also in the house saying moin. Welcome everyone, especially the rare hodlers, but we have also other people in the house. Sean, Jasper, Sean saying, what do you think of the new Omi to Gem and no more cash out via app? You have become a great morning host. So let's jump to that topic right now. And then we do altcoin in the end, so that we see where we are with altcoins, because there's not too much. Dan also says, VeVe removing cash out will remove that liability from the spreadsheet, but at what cost? Doesn't seem user-friendly or mass adoption-friendly. What we're thinking about the Omi news is duck and cover, long time no see. There we go. Best crypto channel. Smash the like. Yeah, thank you very much. Smash the like button, and thank you for that feedback. Excuse me, guys. Okay, time for big sip of coffee, and let's jump to the Omi topic. Or better, VeVe topic. Okay, ready, go. He sees Moin German found. Cheers from Lindau. Greetings to Lindau. Of course, I'm a German. Yes. Yeah, and Moin. Of course, I was born in the north of Germany. In the north of Germany, you say Moin. In the south of Germany, where I live, you say Servus or something like that, right? But anyway, that's just on a side note. Omi to Gems is coming, says it here, right? And people are really negative about this. But let's talk about why this could be good and why this could be negative. There are two sides to this, right? From 19th November 2025, collectors will be able to convert their Omi tokens to Gems via Stacker. Gems will remain the primary exchange mechanism to buy or sell collectibles on VeVe. The legal arrangements that underpin the gem structure will end after 11:59 p.m. PT on the 18th of November 2025. After this date, in accordance with VeVe's updated terms of use, VeVe will automatically convert gems in your account into non-transferable and non-withdrawable gems on a one-to-one basis. That is, in my opinion, a clear preparation for the bull run, because it caters to sides. First of all, they have made very bad experience with gem exploit, which in this case probably doesn't happen anymore anyways. And secondly, they want to do exactly what we are demanding on this channel and put Ecomi as the centerpiece of VeVe to attract every degenerate of the altcoin space. Okay? And it could be a good thing. Now, easy withdrawals. From now until 18th of November, you can withdraw your gems as usual. We're making it easy by removing the minimum withdrawal limit. A flat $10 withdrawal fee will apply to all withdrawals of 100 gems or less. For all other withdrawals, a 10% fee will apply. So they have, of course that doesn't make any sense, because that's also 10%, and if you're sub 100 is even more percent, right? That flat fee is, anyways, it doesn't matter. We are here to help you manage this transition smoothly. Learn more in the blog, blah, blah. By accepting the terms, you confirm you understand the upcoming changes. So this is what you encounter in the web app. Now, so first of all, I think that's getting bull run ready. Oh, by the way, Adam is also here. I don't know if I named you in the Rare Hot Lab. Welcome. But it has some repercussions, right? So let's read some news and then, or some comments, and then we go for it, right? I am always supporting VeVe Official and Ecomi, but whose idea was to enable gems to fiat withdrawal? Come on, guys, we need to do better here. There is no way that this is good, VeVe Digital Collectibles. There is a way that this is good. But first, so Chris Coffee says, so one of my first small caps that I still hold is Omi. Apparently on November 19th, people will not be able to withdraw their gems to cash, but have to convert to Omi if they want to cash out. To me, this eliminates KYC Lots to digest. Am I getting this right? Yes, you are getting this right. Did you know VeVe Official is now publishing blogs on both physical and digital collectibles on their website? By validating both, sorry, that was another news. I thought that was still a comment on that. Back to the gem topic here. Now, yes, KYC. Secondly, you can still cash out. You just have to list for OMI instead of gems, right? Given that many people look for deals on Stacker already, which we see in the Stacker statistics. Stacker weekly recap, 587 transactions with an OMI trading volume of 95 million, 181 buying wallets and 253 selling wallets. Top 3 collectibles: VeVe Gold logo, Ecomi logo red and silver, partner statue. 1.9 million OMI tokens have been burned from circulating supply. What does this mean? Okay, for me, gems was expensive anyways, right, to cash out, because you had first the market fees and then you had to pay a 10% fee and then transaction flat fee and blah blah, right? So it was anyways. The downside is if you get any retail users into VeVe, they will not be able to buy and sell just on gem level, but they have to deal with OMI. The good thing is now you're shifting all the sales to OMI, right? Exactly what we wanted. OMI becomes the primary currency. Basically, OMI converted into gem. Basically, OMI gets forged into gem, which means the gem is not dollar pegged anymore, but it's X amount of OMI forms a gem, right? This is partially back to the old mechanics. It also means that there must be a mechanism to convert gems into OMI. Or you have to spend your rest gems into the market and then sell everything for OMI. Doesn't matter, right? Because you can still cash, if you have larger sums of gems, you can still cash them out right now if you want that, right? But for me, that means delist everything that I wanted to sell, list it for OMI. That's where the thing goes. If I want to buy something, I buy via Stacker on OMI. Exactly what we want, right? Which will spin the narrative with all influencers later. How do you buy a VeVe collectible? You buy OMI, then you go there, and so on. Everything through Stacker. It's exactly catering to Web3 and makes OMI the primary currency for VeVe. It directly ties OMI to VeVe. It directly ties OMI to all of the brands. That was not the case before, right? You could buy it with it, but you could also just upload gem. Basically, VeVe is making good on their announcement that at some point they will remove the gems from the ecosystem, right? So let's see. VeVe gave up on normies back to the original version. Cashing out gems is to fiat is dumb, losing value, absolutely. Normies will come, they will learn. The thing is like this, you can't talk about mass adoption in such a niche like VeVe without talking about using coins and using crypto. The normies will be crypto enthusiasts in a time as well, right? I mean, this is like saying we can't use touch screens because all the old people cannot use touch screens. So let's bring out the phone without the touch screen, right? It's more like, hey, let's bring the touch screen. People get used to it, right? We did see the only bull run that we ever had was when OMI was center of the narrative inside VeVe, right? And we just went through an altcoin season. So I think that they know exactly that this is the only way to revive both Ecomi and the VeVe market. Makes absolute sense. And if someone sits on a 1 billion OMI bag, right? Why not buy some collectibles with it once the price goes up, right? You can then, if Omi outperforms the VeVe market, then you can buy cheap ass collectibles with this Omi that went up in value, right? Because people from the other side, you will look at your collectible and say, okay, I bought it for this gem value, so I need to get $15 out of it, but Omi just did 100%, right? A double. So the one that already sits in Omi, if you want to peg it to $15, you will list it for the current Omi $15 price, which makes it for the one that already sits in Omi once Omi goes up, a 50% discount, right? And this is where the arbitrage game between crypto and VeVe will start, and where people say, look, I can just buy collectibles like hell for Omi right now because my Omi went up, right? And then the game happens then on the other side, because so many collectibles were bought up, the floor price shoots up, and then people can cash out into Omi at that time. So I think this is what they are thinking about, right? Hey, Jimbo Lee Lingo, good to see you as well. These people will complain about anything. Yes, of course they will complain about anything, because they're scared. They're scared because they see only VeVe removes something that must be bad, right? I think this is good. I think this is more good than bad. Let's put it that way, right? Yeah. Could you walk through it, please? How many steps or wallets do you need now in order to fully have your VeVe profits on your bank account? So if I just have to do it from top of my mind, you need a stacker wallet, and you need to list your collectibles for Omi via stacker, right? But the stacker wallet is fairly easy to get. So then on stacker you can swap your Omi to USDC, between USDC or to any. So there's an instant swap within the stacker wallet, and then you transfer your USDC, and then you convert it through whatever gateway you have to your bank account, right? So you will have minimal fees there. Actually, that mechanism removes the fees that you would have besides the market fees, and it does burn Omi tokens, right? Because if you have buyer sides, for every sale you make now, you have a guaranteed buyer side, right? Because someone has to buy it in Omi if you sell it in Omi. So that means there is guaranteed burns in this. Whereas if you have gem purchase, gem sale, gem cash out, no burns at all, right? So you force everyone into the market where the original Ecomi mechanic happens, that wherever a buy of a collectible is happening, a burn is also happening on the fees. It's not the original old school mechanic where there was way more burns in it, but it includes, well, you see it here, right? The transactions that happened last week, it did burn almost 2 million Omi, which is not much, but let's see if it's considered much more when price goes up, right? Or when this goes up, right? So I see this is good. And then combined with that, maybe through stacker you'll also be able to use your Omi to participate in drop. That is good, right? Dan O says sell collectible on VeVe market list on stacker for Omi. Swap Omi for USDC, transfer USDC to Coinbase or whatever. Exactly what I said, yeah. Ducking Cover says, I think this is a good move, at least for now. There is no reason they can't bring it back, and mass adoption isn't coming right now anyway. The mass adoption, in my opinion, will happen through Ecomi and crypto. In my opinion, there was never a fundamental basis where the mass adoption comes from somewhere else than who is already in crypto. Why would someone else be from the mindset already be for digital collecting metaverse showroom applications and and all these topics, but not good enough for understanding crypto, right? So I think this is way more good than bad, to be honest. Not to mention 99% of NFT volume is in crypto anyways. Yeah, exactly. No one outside the cryptosphere knows about NFTs and why NFTs bring value, right? Of course, down the road, 10 years from now, you want to have a society that uses NFTs in the back end, doesn't care about it in the front end, as long as they know, okay, we have guarantees here, but we are not there yet. It's too early. You can be too early. What they tried to do with gems and mass adoption through normal marketing is too early. First, you need to bring your licensors to completely embrace crypto, and that crypto mechanics, blockchain mechanics work in the back end. It has to become normal first for everyone who is already there, and for the mass that use DeFi application, decentralized. There are enough millions of crypto users that know how to use MetaMask wallet, using a DEX, and so on. For this to be successful, you only need tens of thousands, but there are millions of crypto users. The market that you can tap into is already big enough. You don't need of these, let's say, 100 million crypto users that are always present in there. You will find at least 1 million who are convinced collectors. That's way more than you need for VeVe to completely go nuts, because that means that there's only about 11 collectibles per person. Right? So many people that are in crypto first have the funds, secondly there's collector of somewhat. I mean, you see it everywhere. Everyone who has money in crypto, they collect cars, they collect comics, they collect watches, they collect stamps, they collect I don't know what, right? So you don't need to cater outside crypto. It's all there already, and with every day this number is growing. Institutions are in crypto. It will not take long until every altcoin has their ETF, every altcoin is part of whatever fund, and then what is next? What's the next step? Well, institutions and asset managers buying the most valuable NFTs and bring some kind of a participation model on that when NFTs are too expensive, right? So this is the good direction that I think, and orienting VeVe towards this goal is way more important than trying to convince boomers that are still living in the physical world that they need to collect digitally, right? You need to be present when the bull run happens, and then you need to collect enough money to survive the next bear market, and then you need to be present for the next bull run. You need to show up until the bull runs and the bear markets soften each other out, and you have a real industry, right? It's like the internet. You are there, then the dot-com bubble happens, that's where you raise the funds, that's where you make your money, and then out of the dot-com bubble into the crash, that's where you build your business. That's where Amazons and Facebooks and Googles and whatever pile up, and then they have their golden time 2004, 2 years later, right? Or 2004, 6, 8, right? Then next crisis, bam, bear market, right? Even in traditional finance, that's where you have your boom and bust cycles. The only thing is for crypto companies to survive the bust. Actually, you could argue that the crypto space, the altcoin space, and an NFT space is it's a more complex and more perfect economy than the real economy, because we don't let most companies go bust anymore, right? If they have not done their economics right. Now banks and governments are stepping in to save these companies so they don't go down. But in crypto, it's pure Darwinistic hardcore reality, right? Shitty models go down, and they die. We did see it. Recur, dead, right? I don't even know the names of all these. Quid, dead. Quid. Whatever. I don't even remember all the names. I don't know. McFarlane Toys, is it still there? No idea, right? But VeVe, still there, right? They did make enough money in the last bull run to survive this bear market. And they are still there. Now it's time to get everything into position to make more money this time again and to broaden the base that stays throughout the bear market, right? And that involves also VeVe can make money, tremendous amount of money, while we as users also make money. No problem, because they have the fees, right? They can get the fees. Yeah. So let's see. Let's see here the chat. Mewtwo says, Dan O, I'm sure VeVe will survive. They've already survived the hardest part, in my opinion. This bear market has been long and cold. I agree. I think they have enough to survive. They only need this bull run now to broaden what they have and to also learn a little bit that we, as a community, we are not stupid, right? We did know what's necessary also, and we at some point and at certain points I think we also with our opinions and so on, we gave them a little bit direction with criticism, also constructive criticism. We gave them also some direction what we think, and I mean we're not stupid, right? Dano says, I give all the credit in the world to Dr. Profit. He wasn't even part of the original team, and look how he has single-handedly made Omni relevant again. Yes, also I will give big props to Dr. Profit there for the vision that he has, for what he has built, for the passion he put into this, and that he has been convinced on this all the time. Absolutely, yeah, very, very, very true and very important to give credit where credit is due. And I think Dr. Profit was essential to even the survival of VeVe because he brought in the blockchain perspective, right? The crypto perspective. Because in the end, especially David, he knows his licensing stuff and so on, and he has been enthusiastic in the very beginning about what crypto has to offer and NFT has to offer. But we clearly saw that when the bear market hit, there was this tendency for them to be like, do we really need crypto? Or can we just move away from it and abandon it, right? And I think that they did not abandon crypto is mainly Dr. Profit's merit, right? Yeah. So I think crypto is here to stay. And if they embrace it and understand that, they will do really, really well in the future, in my opinion. Because we already see it. Sometimes it doesn't feel like it. Sometimes it feels that there's only Bitcoin. But if you look at it, Ethereum, institutions are massively embracing Ethereum. Institutions are relying and building on Chainlink. Yeah. So there are not many, but there are crypto companies with their tokens that really are essential and necessary for many industries already. So that is good to see. And I think within the digital collecting space, VeVe is the absolute dominant one, and VeVe is the first mover, so they are trying things out. They can make mistakes that others cannot. Once VeVe did it, others are looking, and it's really hard, right? Because VeVe was there showing how it's done, and others came into the market and looked at VeVe and said, okay, let's try to do it differently. Then they attacked VeVe and then they died, right? So VeVe has defended their position, right, on top. Being the first mover is probably the most difficult that you can do in an absolute blue ocean. I give props to that, right? It's from a business perspective, it's very, very difficult. Yeah. So yeah, guys, smash up the like button here if you enjoyed the discussion. We did see a lot of stuff here. We have this this news, this breaking news here. Let's see where it leads us. I for one, I'm just going to spend my couple of gems on the next drop, and then I'll shift to Omi, and that's it, right? But for everyone else, man, you have all the information. You have still time until the 18th of November. Maybe that it will lead to people trying to get some gems out because they don't understand that they can get it easier while by embracing Omi. Let's see what the impact is. But I was thinking that it should have a positive impact for the Omi price then in the long run. Let's see. Maybe it can lead to more volume. More volume leads to more people, more eyes on it, and maybe that makes it all more positive, right? On the other hand, it also excludes some markets, right? This thought that I had now. It will be very, very hard to... there are some countries that really don't like crypto. And it will be very, very hard to then for people in these countries to do cash in, cash out, right? I mean, cash in probably will still work from fiat to gem. But then again, why would you do that if you can't cash out that way? So you need crypto. And so that basically means VeVe will not do well in those countries, right? But maybe over time, all these countries will open up to crypto anyway. So let's see. Anyways, guys, that's it. Smash up the like button, subscribe to the channel, notifications on. And wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon. And I catch you in the next video or live stream with more crypto news from Bitcoin over altcoins to NFTs. Have a good one and bye.